Hey everyone, welcome back to the Encrypted Capital recap for Friday, January 15th. Right now, the market cap is just below $1 trillion, sitting at 985 billion. Bitcoin dominance is at 67.9%. Right now, Bitcoin is at $36,000, Ethereum 1,162, and XRP sitting at 27.85 cents, down approximately 12% for the week. So let's go ahead. Bitcoin's suffering a little bit of a pullback right now. We'll take a look at the charts here. We can see that Bitcoin did come back up to test 40,000 and is now retracing slightly. We'll definitely be keeping an eye on it to see what happens the rest of the day. But for right now, the big news is Tether. Bitfinex and Tether in focus amid key milestone in the NYAG probe. So right now what's going on is Tether had to turn in all of their documents stating whether or not they have the funds backing Tether, a 1-to-1 ratio. It's been questioned if they actually have a 1-to-1 ratio or if this is basically just turned into quantitative easing for the cryptocurrency Tether. Today is the date which the injunction placed on related major crypto companies Bitfinex and Tether by the New York Attorney General. It expires, so it is also the deadline for both companies to hand over any remaining financial documents tied to the elusive $850 million. Tether, the issuer of the most popular stablecoin and major crypto exchange Bitfinex, are operated by iFinex. And Bitfinex and Tether Chief Technology Officer Pablo Arduino said recently that both companies have so far produced more than 2.5 million documentation pages in response to requests from the NYAG. That sounds like quite a bit of documentation, 2.5 million. He said in a recent What Bitcoin Did podcast, General Counsel Stuart Hoegner said that there could be any number of outcomes following January 15th. To name a few, the NYAG could complete its investigation and decide to bring a formal complaint. They could complete the investigation and put the matter to bed, or there may be a settlement between the parties. Any number of things can happen. So we'll go down here to the accusations and risks. So Tether and Bitfinex have weathered a legal storm brought on by the NYAG for almost 2 years, but accusations of manipulation have plagued the project for even longer than that. Much of it surrounds the project's relationship with Bitfinex, confusion surrounding how tethers are issued, and speculation about tether reserves. So it says, worries that one stablecoin, which only represent 3% of Bitcoin's market cap, could hurt Bitcoin by going bust is absurd, said Held, adding that the rise in Tether issuance during the Bitcoin rally doesn't mean it caused it. Held pointed to another widely held stablecoin, USD coin, saying that it too shared the correlation with Bitcoin, adding that is entirely intuitive as folks are wiring in money to take advantage of arbitrage opportunities. I know that USDC is more regulated than USDT, so I'm not exactly sure what the price impact will be on Bitcoin or if the Tether news is already priced into the market. We'll have to take a look and see what happens here in the next few days. On to the next article. British financial advisor calls on the government to ban crypto transactions. Good luck with that. We've heard about many bans throughout the years, particularly China. It says Neil Liversidge, a veteran financial advisor, has called on the government of the United Kingdom to ban transactions in cryptocurrencies like Bitcoin. Liversidge, the owner of an independent financial advisory firm, West Riding Personal Financial Solutions, started a petition urging local financial authorities to stop crypto transactions in the UK. He went on to say that a crypto ban would immediately trigger a crash on the market if the UK government takes a lead by banning transactions on cryptos as my petition requests. That will set off a chain reaction, crashing cryptos overnight, he said. The IFA's verdict is that all crypto investors should immediately sell their holdings. So if you're holding cryptos now, my advice to you is to find a bigger fool than you and dump them quick. Liversidge also told Cointelegraph that he has never owned any and never would buy any crypto, even if he knew that it would bring him hundreds of percents of returns. So this guy is basically an idiot, and he clearly has not been following the market for any length of time. The whole find a bigger fool than you theory doesn't really work when you have a deflationary asset. And I do recognize that crypto only has value because we say it has value, but the ones that do have real world use cases will survive and thrive. We all know that we are a fan of XRP and XLM to be able to do just that. Anytime I hear a ban on anything, especially any of these governments, all I can think of is that they're trying to shake the tree to get weak hands to sell their positions. Clearly, this guy doesn't make any sense to me, and I don't think he's going to have much luck getting the government to ban crypto transactions. Anytime we ever heard of a ban from China in previous years, maybe the market dipped a little bit, but then the big whale stepped in and bought more. And so I wanted to go ahead and on the same page, we can go into Christine Lagarde when she was talking about global regulation of Bitcoin, saying the digital currency had been used for money laundering. So let's go ahead and play that again.
It is a speculative. It's a speculative asset by any account. I mean, when you look at the most recent developments upward and now the most recent downward trend, it's for those who had assumed that it might turn into a currency. Terribly sorry, but this is an asset, and it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activity. I think that there are criminal investigations that have taken place that I'm sure will continue to take place that demonstrate it.
All right, so funny business, money laundering. Did they forget that that's what fiat is used for? Have we not seen how many banks have been caught money laundering? Because guess what? I pulled up this article right here. Banks fined 14 billion in 2020 for money laundering violations, personal data leaks, and more. New data reveals that banks from around the globe have been fined 14 billion in money laundering and operating violations over the course of the last year. The Bank Fines 2020 report by Finbold shows that banking institutions from 20 different countries will be coughing up $14.21 billion for breaching various money laundering protocols such as AML, KYC, and other operating guidelines. No surprise there, the US holds the largest quantity of fines with 12 fines in total, followed by China, which has 7. Goldman Sachs, surprise, was fined the most money last year by far, owing $6.2 billion in fines. Wells Fargo comes in second with $3 billion worth of fines, followed by JP Morgan, which owes a little over $1 billion in fines. And back in September, the news broke that a congressional investigation into the 2016 presidential elections turned up information that U.S. banks may have processed $2 trillion worth of dubious transactions. Surprise, surprise. Wouldn't it be great to just own a business like Goldman Sachs where you could do whatever the hell you wanted, make as much money as you want, and then you get a little slap on the wrist, $6.2 billion in fines, or that's nothing off your bottom line, and they can continue operating business as normal. I find this all very funny. I think this is all theater at this point. It's only a matter of time before they start issuing in stable coins like Germany and Ukraine did with stellar lumens. It wouldn't surprise me one bit if we cross over and start doing the same thing shortly. Jerome Powell did speak on this. This is my next article here. Fed chief bets that US's first mover advantage in CBDC race is stronger than China's. So it says Jerome Powell, the chairman of the U.S. Federal Reserve, has suggested that the United States is in no rush to issue a central bank digital currency. At the webinar, Powell stated that since we are the world's reserve currency, we think we need to get CBDC issuance right. We don't feel an urge or a need to be the first. Well, they better feel a urge or need to be the first because Ukraine and Germany are now issuing, and it won't be long before other countries start doing the same thing. I found another article that talked about how the U.S. Fed has a very high priority to combat bad private sector money. The United States Federal Reserve needs its own digital currency to protect against the possible overnight proliferation of stablecoin technology, says Fed Jerome Powell. So it says cryptocurrency stablecoins could become systemically important overnight. Since we are the world's reserve currency, they don't need first mover advantage. But then he also went on to say that this whole stablecoin issuance could happen overnight. So is he downplaying this? Is this something that they are planning on implementing here shortly? I guess we have to wait and see, but it seems like a little bit of doublespeak where they're not too concerned about getting it going right away, but then everything could change overnight. So which is it? Crypto is going public. Timing is key as Bakkt secures New York Stock Exchange listing. As Bakkt prepares to be listed on the New York Stock Exchange, even more crypto companies could be going public in the future. We already know that Gemini is looking to go have an IPO. Coinbase is looking to have an IPO. Kraken has become the first digital bank in the US. Digital assets marketplace Bakkt is set to go public on the New York Stock Exchange in 2021, which could pave the way for more cryptocurrency service providers to follow suit. The Intercontinental Exchange announces at January 11th that its cryptocurrency marketplace Bakkt would soon be listed on the New York Stock Exchange public market. This will be done through a merger with a special purpose acquisition company, VPC Impact Acquisition Holdings. The shell company will be used to merge with Bakkt in order for it to be listed on the stock market without having to undertake an IPO. Initial reports suggest that Bakkt will be valued at over $2 billion after the merger, and the exchange intends to raise a further $532 million to bankroll the ongoing development of its application, a wallet and rewards app targeting retail users, which is expected to be launched in March. This has been a long time coming, guys. You don't just launch these things overnight. This has probably been years, if not a decade or more, in planning. The company has indicated that the merger is expected to be wrapped up in the second quarter of 2021. This will then see the newly formed Bakkt Holdings Inc. listed on the New York Stock Exchange. So it says Bakkt and VPC believe there is enormous potential in building a marketplace for the nearly $2 trillion of digital assets that exist today and the many others that will be created because a marketplace such as this exists for both brands and consumers. So this is paving the way for grandma and grandpa to be getting involved in crypto once they can actually log into their Scottrade or E-Trade account, and they can go ahead and buy digital assets and keep them on their platform versus having to go and hold them on the ledger. This will bring in a lot more money to the market. And then you also have cryptocurrencies like XRP and XLM, XRP handling international cross-border settlements and possibly derivatives, which would be a $1 trillion market cap plus, as well as the peer-to-peer protocol via XLM, with countries building their own stable coins. We are watching the new era of money being built right before our eyes, and Bakkt is going to be leading the way here in the US. Gemini, they are going to be offering a credit card with crypto rewards. It says Gemini, a crypto exchange and custodian, today announced that it will launch the Gemini credit card, a credit card with crypto rewards. This effort has been accelerated by the acquisition of Blockrise, a fintech startup that has been building a credit card with crypto rewards. In preparation for launch later this year, Gemini has opened the Gemini credit card waitlist. So Gemini customers and people already on the Blockrise platform can go ahead and get early access. And they're going to be combining Gemini's simple, reliable, and safe platform with Blockrise's reward program. And then card holders will be able to seamlessly earn up to 3% back in Bitcoin or other cryptos on every purchase they make with the credit card. So it goes on to say that the credit card will make it easier for any consumer to invest in Bitcoin and other cryptos without changing their existing behavior. Tyler Winklevoss, CEO of Gemini, said, rather than deciding how and when to buy crypto, customers can do so when making their everyday purchases. We're excited to welcome the Blockrise team, blah, blah, blah. So yeah, Gemini getting involved in the game with the credit cards. We know Coinbase is having their own credit card. And obviously, Coinbase is doing loans as well. So, like I said, this is all right in front of our eyes here. It's a whole new paradigm shift in basically getting out of fiat, which is already digital ones and zeros in your bank account, going and actually using the blockchain. So, like I said, it does become a very slippery slope, because if they are saying that Bitcoin is not an asset, or Bitcoin will not be a currency, I should say, and it's just a very speculative asset, it seems to me like Christine Lagarde and others in the World Bank and IMF are going to be looking to have stablecoin issuance for these countries, and this is what will be brought in instead of what we were all planning on, which would be Bitcoin. So could Bitcoin be less than what we thought it was going to be? Will there be stable coins that get issued in its place? Maybe Bitcoin will not be the world reserve currency. Maybe it's going to end up being a Stellar Lumens or an XLM. Only time will tell. And speaking of Tel here, look at that segue. If you've been hearing about Tel but aren't familiar with the project, start with these two graphics. This was sent by Patty Stash on Twitter. It says, let's be clear, Telcoin isn't your standard crypto. It's a unicorn business in the making, and it is relatively new. So let's go ahead. We'll take a look at their roadmap here. So it talks about the KYC module integration and the on and off ramps, along with the partnerships in Asia and the fiat receiving markets, along with crypto integration. So this is just part of the roadmap, but they are working with remittance providers, Gcash in Asia, and their global partners and regulatory licenses do span across Asia with Gcash, ECPay, Vimo, Talon, TouchPay. A lot of these companies we haven't heard of in the US, or at least I wasn't aware of too many of them until I started researching Tel. But as we got the news yesterday regarding Canadian remittance, it looks like they are starting to partner up with Gcash and Tel. So big news for Tel. Let's go ahead. We'll take a look at the charts here. I know it's on a little bit of a pullback today, given everything that's going on in the markets. Actually, not even. I mean, you're talking Telcoin hit roughly 0.008 cents. It's only dropped roughly 12%, when the rest of the market looks like it's been taking a little bit of a beating here today. Bitcoin is down roughly 13%. So yeah, it's moving in tandem with most of the markets, but I still think Telcoin is a great project. Definitely look more into it if you are looking to diversify your holdings. I do think that this could be a sleeper, definitely a gem that I've added to my portfolio back in November, and I'm glad I did. Actually, I've been holding Telcoin for a little while, actually back since 2018, but I did add significantly to my position in November and am looking for some big gains to come out of it. So definitely do your own research, but definitely check out Telcoin. I do like the project a lot. I think it's got a lot of promise. And with that being said, that will do it for the Encrypted Capital recap here for Friday, January 15th. If you like what you heard, you can tap the subscribe button, drop us a comment or a like, and we will catch you all in the next video.